So in this video, we're going to talk about Tesla. Another Wall Street analyst just became less bullish on the stock. And as you can see, over the last 90 days, stock valuation has been cut in half. And price now finds itself at the Trump pivot, which was a catalyst back in November for the stock rising from roughly 240 to 480, nearly doubling in price. However, that has been since cut in half, and it's the worst Mag 7 stock for the year. Now, before we continue with the analysis, let's actually get into the news. So Tesla stock continues to be on a major losing streak. It's falling for 8 straight weeks. And shares were down again, roughly 6% today. Now, the leading EV maker has now lost 50% of its value over the past 3 months. With all the negativity surrounding the name, investors might wonder if it's worth considering buying the dip. Now, today's drop comes after one Tesla bull just cut his firm's price target by $85 per share. You have a Mizuho's Vijay Rakesh is still taking a bullish stance, but its price target dropped from $515 to $430 per share, according to Barron. Now, the new price target implies more than 80% upside after the stock's recent free fall. Rakesh still rates the stock a buy for that reason. The analysts note the effects on the brand as CEO Elon Musk has immersed himself in politics and become a polarizing figure. The analyst goes on to say he believes Tesla's sales woes are the result of deterioration in geopolitical brand perception, share loss due to strong competition in China, and softer than expected demand for the Model Y refresh. Now, investors need to weigh those negatives against Tesla's long-term potential, though. It's hard to quantify how Musk's other activities are affecting the company. Musk likely isn't overly concerned with that, though. He said the company's full self-driving technology is where the real value lies. He famously said investors who don't believe Tesla will solve autonomous driving shouldn't own the stock. Tesla plans to finally launch its Cybercab on public streets this year. All right, one more note from Rakesh included some optimism on the front in his research note. They continue to see Tesla as a leader in the EV and self-driving markets. If it succeeds in becoming a leader in the autonomous vehicle sector, investors might want to consider buying the dip. Now, from a valuation standpoint and a stock pullback standpoint, one might consider buying the dip. I mean, this is a monthly chart, and you can see where price came from in relation to where it was in the past. And so this level 100 to 220 is what I'm considering a buy the dip level. And as you can see, price did bounce off of the upper portion at 220, sitting at 238 now. However, if you want to play conservative, you may want to wait for a trend line break of some sort, but you won't get that until about 300. Yes, you miss some of the upside, but you also have some protection as well. Going back to the daily chart, again, I would anticipate price basing around this Trump pivot until April-ish time frame, when we get some resolution or some clarity on the Trump tariffs war that's taking place. But if you believe in Tesla longer term, this is a great opportunity to start scaling in. Thanks for watching. Subscribe. Please like the video.